Hi everyone, I'm Stéphane Renevier from Invest in You Academy. I'm an ex-portfolio manager. I worked for more than 7 years in London, where I was managing long-short global macro strategies across FX, commodities, equities, and fixed income. And I was also responsible for tactical trading opportunities. And now, about a year ago, I founded Invest in You Academy, and the goal is to help students land their dream job in the finance industry and prepare them, for a successful career at top banks, top hedge funds, and top asset management firms. So in this video, I'll share with you my stock pitch on crypto exchange Coinbase, which you can use to prepare for your interviews, or even as a potential trade ID for your personal trading account. But keep in mind, you have to do your own research, and this is not investment advice. Okay. Coinbase. So Coinbase is a crypto exchange. It operates in the rapidly growing crypto industry. It's a growth stock with a current market cap of about 50 billion, and it started trading publicly on the Nasdaq exchange on the 14th of April of this year. And it's currently trading at $235, which is about 45% below its all-time high price of $429. And my recommendation is to buy the stock with a 12 months price target of $310, which represents an upside of 32%. So let me start with a bit of background about the company and the industry it's operating in. So what's Coinbase and how does it make money? Well, so Coinbase is a crypto exchange, which actually describes itself as the engine powering the crypto economy. What that nice marketing slogan means is that it's essentially an online platform for buying, selling, transferring, and storing cryptocurrencies like Bitcoin or Ethereum, for example. It makes about 85% of its revenues from trading fees. That's what they call a transaction revenues. You can see it here. And every time retail users, investors like you and me, or institutional investors, like hedge funds and large corporations, use the platform to buy, sell, or store cryptocurrencies, Coinbase takes a fee. So the more people trade, the more money the company makes. And right now, almost all of the transaction revenue is driven by trading from its retail users. You can actually see the breakdown here for 2020 revenues, and 81% of revenues were driven by trading by retail users. But Coinbase also has other sources of revenues, coming from other products like subscription and services that you can see here, which essentially allow its users to do a bunch of cool stuff with their crypto, such as storing them safely. That's really important for institutional investors, earning interest on their stable coins, borrowing, lending, and lots of other things. But they have also other revenues coming from other clients like institutional investors here. So, once again, hedge funds, asset managers, and large corporations. And also what they call their ecosystem partners here, which are essentially, developers and payment services companies, for example, who want to access the platform. Now, Coinbase operates in a very new and rapidly growing industry, the crypto industry, which is forecasted to grow at around 10% CAGR until 2026. But of course, that's a base case. And, I think there's a fair chance that it grows much faster than that. Its total addressable market is absolutely huge. It's estimated at $780 billion. The current market cap of all crypto assets is estimated at around 1.8 trillion. So there's really a huge opportunity. And if you look at history, Coinbase has actually managed to consistently increase its market share. You can see it went from about 4.8% in the first quarter of 2018 to now 12.2%. And what's really impressive is that they've achieved that, despite charging above average fees, which really shows, the quality of that business and the quality of that growth. If I've looked at the financials, and they're truly impressive for such a high growth fintech startup. Coinbase has not only been growing its revenues at triple-digit returns over the last few years, but it also boasts above average margins of around 40% right now, low debt, positive free cash flow, and it possesses a high degree of operating leverage. So, strong financials. Here I also show the latest key metrics for its earnings that it reported for Q1 2021. And Coinbase has really exceeded expectations for their first quarter. Actually in the first quarter alone, it did better than the whole of last year, both in terms of revenues and in terms of EBITDA. And looking at key metrics, it's really impressive. Its number of verified users grew from 43 million back in December to 56 million in March this year. And this includes more than 8,000 institutions and over 134,000 ecosystem partners that are on their platform. So it seems like a great business, but a great business doesn't always make a great investment. So I'll move to my investment thesis now, which will explain why I believe the stock is actually a great investment at current prices. So basically, I recommend buying Coinbase for 3 reasons. 1, it's a smart bet on crypto prices. 2, it basically has an embedded free option on the growth of the overall crypto ecosystem. And 3, its 2 competitive advantages will allow the company to continue growing rapidly and to preserve its market share and high margins. So let me go into each of the 3 reasons in more detail. So the first reason, it's a smart bet on crypto prices. And I think it's smart in 2 ways. First, because by buying Coinbase, you're not really betting on crypto prices to recover and rally. You're actually betting on prices to remain volatile enough so that people keep trading. Remember, it makes most of its revenues from trading fees. And I think the market is really missing that point. So I think if we even if we have let's say a big leg down in prices, I would expect Coinbase to lose much less than the main cryptocurrencies because they tend to benefit from increased trading activity. But it's also a smart bet because it's an easy way to access the whole crypto growth story. You don't have to create a crypto wallet or open an account at Binance. All you have to do is buy Coinbase stock, which is publicly listed, and it trades on the US, one of the main US exchange, and it's highly liquid. So I think a lot of investors that are constrained in what they can invest in will participate in the crypto growth story through buying Coinbase stock. So tactically, I think there's really a strong case for buying Coinbase. Now let's look at the second reason, which is essentially that Coinbase has an embedded free option on the growth of the whole crypto ecosystem. As I've said earlier, 85% of its revenues are currently coming from trading fees, but its other sources of revenues are actually growing rapidly, and I think they have the potential to become a significant driver of returns in the next few years. So you're not just betting on the price of Bitcoin and Ethereum, like the market seems to believe. You're actually betting on the growth of the whole crypto ecosystem. Things like DeFi, stablecoins-based payments, autonomous blockchain applications, tokenization of real assets, staking, lending, and many other really exciting things. And I think the company is particularly well placed to monetize those numerous opportunities. Coinbase has developed cutting-edge technology and infrastructure. They've got honestly some of the smartest people in the industry working for them. They can attract top talent. So I think they really have the potential to innovate and disrupt the industry further. And I think the market is ignoring that, or at least I think it's underestimating the value of those non-core opportunities. So that's why I say you essentially get a free option on the future of the whole crypto ecosystem. So this second reason is more strategic. It's more kind of a long-term reason for why you should buy Coinbase, whereas the first one was more of a tactical reason. And now the third reason is that Coinbase has 2 key competitive advantages. That's something that's called an economic moat in the industry. And those 2 advantages should allow Coinbase to continue to grow rapidly, preserve its market share, and retain high margins. So its main competitive advantage is its intangible assets. In particular, 2 things: its brand name and the relationship it has built with regulators. So let's face it, taking a step back, the crypto industry doesn't have a great reputation. And because it's so new and it's still lowly regulated, it's a bit like the Far West, and it scares a lot of institutional investors and regulators. And I think in this environment, the highest quality businesses are the ones that will win tomorrow. Businesses that clients and regulators alike will trust. And I think, particularly institutional clients will need to trust who they're doing a business with in the crypto industry. And I think, Coinbase has built a reputation for being the safest, the most trusted of all of the exchanges. It's widely recognized for the quality and simplicity of its products and services, for its focus on security. It actually so far never reported a security breach. And for its culture of excellence. And that should really continue to attract both retail users, institutional investors, and new ecosystem partners. It's also well ahead of its competitors when it comes to compliance policies. And it has built a strong relationship with regulators over the years. And I think that's going to become really, really key over the next few years. Because governments around the world are tightening their grip on crypto regulations. So relative to some of their competitors, which overall have really weak compliance policies. If you look at Binance, for example, they really have weak compliance policies. Then Coinbase should be in a good place to gain additional market share. So overall, I think based on those two competitive advantages, Coinbase is in a really good place to keep growing rapidly, gain additional market share, and retain high margins. And that should translate into a premium for the stock. But as we're about to see, I don't believe the market is pricing correctly this premium. So valuation. So I believe the valuation is attractive for such a high growth, high margin, and high quality business. I've used an EV to sales multiple to estimate the fair value of the business because it doesn't have a lot of financial history, it has volatile margins, and it's growing extremely rapidly. So I think overall, a multiple approach applied to sales is much better than a DCF approach. Using this approach, I estimate Coinbase fair value range to be between $285 and $340. And my official target is at $310. The market currently is expecting the company to basically trades at around a 10 to 11 EV to sales multiple, and it expects between 5.8 billion and 6.8 billion of revenue. So it's trading here, but I expect that it should be trading here. Now, something that is interesting is that looking at different scenarios, I see that there is some asymmetry between the bull and bear cases, with the bull case leading to gains of about 75%, to a share price of around $407, and the bear case to losses of about a minus 30%, to a share price of around $170. So it's a potential a 2-to-1 gain to loss ratio on the investment. So it's a pretty attractive investment opportunity. And I see two catalysts for my thesis to play out. First, the company report its earnings on August 10. And, I expect the company to show strong results for its non-trading activities. And I think that could be the catalyst for the market to recognize the quality of Coinbase growth and acknowledge its non-core business and basically assign a higher multiple to its price. And another catalyst is basically a crypto price action, which could once again turn more volatile, or prices could even rally further. And in both of those cases, that would be a very positive catalyst for our thesis to play out. So to value Coinbase using an EV to sales multiple, I first forecasted its revenues. And the company makes about 81% of its revenues from retail transactions and the rest from other revenues. So of course, if we can estimate that retail transaction revenue part correctly, we're already a very long way towards making a sensible forecast. So what drives retail revenue? Well, ARPU and MTU. ARPU stands for average revenue per users, and it captures how much each client contributes to revenues. MTU stands for a monthly transacting users, and it's essentially capturing how many users are trading. So, you just multiply one by the other, multiply by 12 because there are 12 months, and you get an estimate of retail transaction revenues. So basically, to estimate next year's revenues and to estimate these ARPU and MTU numbers, as well as these other sources of revenues, I've looked at different things like past growth rates of both ARPU and MTU. I've looked at the link between them and crypto prices and crypto volatility. I've looked at the management comments in the previous earnings report, and I've also looked at what other analysts are expecting. And I think overall, there are three main scenarios possible. My base case is that we'll see an average revenue per users of $60 and 7 million monthly transacting users. So, 7 million monthly transacting users is actually Coinbase management base case. That's what they expect for the end of the year. And average revenue per users of 60 is actually quite conservative. It's below its current average revenue per users. But I think it achieved this extremely high number in an environment that I think was exceptional, and I don't expect it to be repeated all year. So that base case assumes that crypto markets remain volatile and that the company can keep up its pace of customer acquisition. Of course, I've also forecasted separately institutional transaction sales, subscriptions and services, and other revenues. And here I just show basically the final output in this table, as well as basically the implied new revenue mix, just as a sensibility check. And so, that base case gives me a final revenue estimate of 6.2 billion for 2021, which is in line with the median analyst forecast. But of course, revenues, depend a lot on what happens to crypto prices. So I've also created two other scenarios: a bear case in which basically I expect a range-bound crypto market to drive retail traders into higher octane investments like tech stocks, for example. And in that case, revenues could be as low as 4.3 billion. But there's also a bull case where we see a strong recovery in crypto prices and renewed trading activity. In that case, I think it's possible to see revenues reaching 8.3 billion. So, really interesting upside in case things go really well. So once again, you can see here in the table the bull, the bear, and the base case. And the market is currently expecting 6.2 billion revenue. So I'm actually very close to that consensus estimate. Now, at which multiple should these revenues trade? Well, first we have to identify comparable sectors, and I've actually identified 4 of them. So traditional exchanges, like ICE and the Nasdaq in the US, but I also look here at at exchanges in other geographies, like in Asia and in the EU. Online brokers, like Interactive Brokers or Schwab, but also payment firms, payment services firms, like Square, Visa, or PayPal, and high growth fintech startups like Lemonade or Upstart. Now, if you look at online brokers, they've got the lowest enterprise value to revenue multiples at around 8 times. If you look at traditional exchanges, they've got an EV to sales ratio of around 11 times, payment firms at around 18 times, and high growth fintech firms at around 21 times. So, what warrants a high multiple? Well, high margins, but even a better, high growth. I really think high growth is what should warrant a higher multiple. If you look at exchanges, for example, they've got high margins, but they've got a lower growth. And I think that's why they're trading at a multiple lower than, payment services firms and high growth fintech firms. And if you look at Coinbase, it has both high growth, you can look here, the sales growth versus pretty much every other sector and companies. It's really in the top decile. And they also have extremely high margins. So in a way, the best of both worlds. So, I think overall, Coinbase should definitely trade at a higher multiples than brokers and traditional exchanges. And I think it should trade closer to payment firms and high growth fintech firms, because also I think crypto will increasingly be used more as a means of exchange rather than just a store of value. And, Coinbase is moving from being mostly a crypto exchange that is just doing, Bitcoin and Ethereum trading, or that's what it was doing, and it's moving more and more towards really being the engine that powers the overall crypto ecosystem. And I think when the market will start to appreciate those new opportunities and that transition, the stock should start to trade at multiples closer to high growth fintech firms. So, overall, I believe a multiple in the range of 13 to 14 times is appropriate. So that's really between e-brokers and traditional exchange and high growth fintech firms and payment services. So I think this is really reasonable. And I think in the future, I even expect Coinbase to trade at higher multiples than that. And if we apply a multiple of 13.5 times to our expected revenues of 6.2 billion, well, that translates into an enterprise value of 83.7 billion and a market cap of 84 billion, which itself translates into a share price of 310. You can see it here. So, again, to summarize, the market is currently implying a low multiple of around 11 times consensus estimates of revenues. But, the range for our fair value estimate is between 286 and 340. The bull case could see prices breach $400. And in our bear case, I think prices could go as low as $160. Now, of course, we must make sure we understand the main risks before investing. And Coinbase is a high risk, high reward stock that depends on the volatility of crypto prices in the short terms and on the growth of the overall crypto ecosystem over the long term. And there are many, many risks, but here we just list the most important ones to our main thesis. The first one is around crypto prices. As we said many times, Coinbase price is tied to the performance of crypto prices in the short term, particularly the volatility of crypto prices. So, the worst case scenario here is that we see lower prices with low volatility. So, a crypto winter, for example, in that environment, Coinbase will not do well. Secondly, regulation is also an important risk. I said Coinbase should do well relative to other crypto exchanges if regulation tightens. That's true, but it's still at risk in absolute terms of a change in regulation. Thirdly, the earnings release on August 10 is both a catalyst for a higher price, but also a short-term risk. Analyst expectations are broadly optimistic, and unexpectedly bad numbers could have a negative impact on the stock price. Although if that does happen, I would probably consider buying the stock even more aggressively. Another important risk is that competition drives down margins. Competition is coming from pretty much every angle: neo brokers, payment services firms, fintech firms. And over the long term, yes, I agree. I think it's likely margins will shrink. That being said, I don't see it as much of a risk over the short term. We've seen it with the financial industry. Shrinking margins takes time, and it's really hard to predict when the shift happens. So I think it is a risk over the long term, but currently, I wouldn't be too worried about it. Lastly, valuation is a risk because the business is extremely hard to value given the amount of uncertainty driving its main variables. Crypto volatility, adoption of crypto by institutional investors, regulation, and they're all outside of the management's control. So that makes it a little bit harder to assess the business. And it's also important to note from a valuation perspective that, US equities and particularly tech stocks are trading at really high valuation levels compared to their own history and compared to other sectors. Should equity markets fall, I think a general re-rating of multiples to the downside could be a risk to the stock. So to wrap up, we've seen, the background that basically Coinbase is the high growth firm in a high growth industry. It has extremely strong financials. Then we've seen in our main thesis that Coinbase is a smart bet on crypto prices. The market misunderstands that. It's a bet on crypto volatility rather than a bet on prices. And it's also a blue chip way to play the crypto growth stories, which is very good. Secondly, we think, buying Coinbase at the current price gives you a free option on the potential growth of the whole crypto ecosystem. And we think the market is underestimating the growth potential of this, non-core source of revenues. And thirdly, we've seen that, due to its strong competitive advantages, its brand name and the relationship it has built with regulators, it should continue to preserve and even grow its market share and preserve its above average margins. From a valuation perspective, we actually expect a re-rating of its multiple from 11 times currently, that's where the market is trading right now, to about 13.5 times. And applied to our expected forecasted revenues of 6.2 billion, that gives a share price of around $310. And we've also seen there's an interesting 2-to-1 asymmetry between the bull case and the bear case. We've seen two catalysts. The first one is the August 10 earnings release, and the second one is a potential return of crypto price volatility. And lastly, we've seen the main risks, the risk of a crypto winter, the risk of regulation, the risk around its earnings release, risk from lower margin due to heightened competition, and the risks around valuation. So we hope you found this video useful, and please, if you think this is useful, make sure to follow Invest in You Academy, or follow me personally on LinkedIn or on YouTube. I'm going to post a lot of these videos in the coming weeks, giving you lots of trade ideas, lots of tips on how to ace your interviews, and even potentially some interesting trade ideas for your own PA. So hope to see you soon, and thanks for watching.